Hello and welcome to News Desk. I'm Girish Banerjee.
And I'm Pablo Foley-Elias.
Now, the nature of global trade is changing, and US President Donald Trump is the one who is driving that change, or rather, his tariff policy is.
Countries wanting to trade with the US now have to make individual deals with it or face punitive tariffs from the world's biggest consumer.
And some countries already have made those deals. For example, the UK, Indonesia, Philippines being just some of them. The EU doing a deal just a few days back over the weekend. But who is coming out on top in all of this deal making, and how is global trade being rewired? It's what we're discussing today on News Desk. And to have that discussion on the table today, which is being made possible by Michelle Stockman, who's producing the show. You don't see Michelle because she sat with a technical crew, making sure that all the gadgets and the mics work, for example. So thanks for doing that, Michelle. But we also have at the table, I believe, for the very first time, Stephen Beardsley.
This is my second time, right?
It's your second time.
Yeah.
I thought you News Desk version, but because we have this tradition, right? Whenever somebody's there for the first time, we ring a bell.
That's
we
right.
don't ring a bell, but still,
I forgot the bell,
it'll
thankfully.
be a good tradition to have.
Yeah.
But welcome nonetheless, Stephen.
Thank
Stephen
you.
is going to be helping us to get a handle on things because Stephen has been looking at the German economy in particular in quite some detail as part of his beat. So good to have you there. Stephen, we also have Cherry Chan, who's going to be in the chat. Cherry in the chat, Chan, who's going to be talking to you guys in the community, bringing your questions, concerns and comments into this discussion so that we can bring them to our meet in just a short time. But then, Cherry, that's not the only thing you'll be doing, right?
That's not the only thing that I do. I also have a poll question for you. Today, we would like to know your opinion about this. How should your country respond to US tariffs? There are 4 options: accept Trump's trade terms, seek new trade partners, stand firm, show strength, or boost the local economy. So remember to vote, and I will let you know about the results later.
That's great. Thanks, Cherry. And do write in and vote, of course, as Cherry said, in that poll and send us in your comments. And I've been taking a close eye on the comments, and we've had plenty already on this topic. I'm just going to read out a few of them. One from the Gambler Gomez 4097. America's stepping up to its global dominance with oil, LNG and heavy weaponry sales. Everybody needs America stronger. And then Lorenzo Visa 5357. Just wait, just wait. We'll see where everybody is in a year or so. People are saying tariffs are not affecting anybody. Oh, yeah? OK, we'll talk in 18 months. That's quite an ominous message there from Lorenzo. We've got another one here from Cage Kiv X. How about the nuclear option of not selling to the United States? Trade deficit is basically the US unable to sell their cars, but rich people still want their Mercedes and luxury cars. Also, people who are not rich, believe me. It's a loss of revenue, but not out of need or capability. Trump is being brash and boastful with empty bravado. They are the ones lacking in manufacturing and in need of fixing. And then just one more, if you'll permit me, from Lords 1997. Winners, corporations, American primarily, but also European. Losers, the people, the consumers, the workers, the poor, who will see no benefit from a wage increase or a higher quality of life from this awful, and inverted commas, deal. So we've got some varied opinions there, but do please send them in. And Cherry, of course, will be keeping an eye on the chat, as will I.
I mean, that last comment is very interesting because we do, ultimately, all of these tariffs, they ultimately boil down to the level of people. And just on that point about rich people still wanting the Mercedes, I don't know, Stephen, but I think Mercedes posted losses, didn't it, after these whole tariffs? So it's not really going well for them either.
No, it's not. And it's sort of interesting because Porsche, too, also posted a really big hit. And you would think maybe, especially Porsche, these are areas where luxury cars would be less exposed to this kind of thing because you would imagine buyers could actually afford to pay a little bit more. But apparently Porsche makes almost all of its cars in Germany, so it ships overseas, so it's especially vulnerable to those tariffs. So, yeah, luxury cars are not doing so
And we're going to be
right
discussing that as we go along. But then, you know, we're talking about tariffs. I mean, this is not the first stream we're doing on tariffs. But the fact is that the discussion about tariffs has been carrying on for months, right? For at least more than 3 months. And the reason I say 3 months is because the 2nd of April is when Donald Trump was announcing his so-called reciprocal tariffs. I just figured it might be a good idea to just have a catch-up on what is the moment we are at, where is the story at, because it's been going in and out of the headlines. So here's a quick catch-up, and I hope I'll get my facts wrong, and if not, Stephen is there to sort of correct correct me, hopefully. So this story, in a sense, just for the purpose of our catch-up, begins on the 2nd of April when Donald Trump announced reciprocal tariffs against trade partners of the United States. Now, the 2nd of April is when that announcement was made, but then that is not the first time that Donald Trump talked about tariffs. He was talking about it in the months leading up to it as a way of sort of evening and leveling the trade deficit that the United States has with a number of countries. He made it a question of fairness. He said that countries have taken advantage of the United States all these years, so he was sort of leveling the playing field. A significant move and a significant date, and this wasn't lost on countries around the world. And I think just last weekend, the EU's Trade Commissioner, Maros Sefcovic, I hope I pronounced that name correctly, he sort of tried to articulate how important April the 2nd was. It's just worth listening to what he had to say.
August, it's quite obvious that the world which was there before the 2nd of April is gone. And we simply need to adjust, we need to address the challenges which are coming from this new approach. And I believe that the strategic cooperation with our strategic partner is a better outcome than all-out trade war.
Now, he's talking about a trade deal that the EU just signed on the Sunday. We'll be talking about that in a bit. But then back to these, to the 2nd of April when these reciprocal tariffs were announced. So what kind of tariffs are we talking about? We're looking at something like 46% against Vietnam that was announced on the 2nd of April, 49% against Cambodia, and something like 50% against Lesotho in Africa. Now, just to clarify, when we're talking about these percentages, what we're basically saying is, say, for example, take the case of 46% tariffs against Vietnam. That would basically mean that if you're an importer in the United States and you are purchasing a commodity, you're importing a commodity, a good from Vietnam, beyond the price of the commodity, you're paying 46% over and above that as a tariff or a tax to the US government, essentially making that product more expensive and raising the possibility that this price would then be passed on to the consumer, making things more expensive in the United States, and also those goods becoming unattractive for importers because, hey, they are so expensive, you need to pay a tariff on them. That was the reasoning. Has all of that happened? We can discuss that. Anyhow, so after these tariffs were announced on the 2nd of April, you had an immediate reaction. There was shock all across the board, particularly in the stock markets. You could see it went into a tailspin, particularly the bond markets. And after enough days of, and I'm just giving a very brief version of all of this. And after a bit of turmoil here, you had a decision taken by the US government in which these tariffs were suspended. The implementation was suspended for a period of 3 months into July, and then this was further extended to the 1st of August, meaning essentially the 1st of August, as of now, coming Friday, is the deadline after which tariffs will be imposed on a number of countries. There's already a 10% tariff across most things coming into the United States, but this is about more country-specific tariffs. Now, why was this extension done? Because the US government said, look, we have about 90 days. This was in April. We have about 90 days, and in 90 days, there'll be 90 deals made with countries around the world. Did 90 deals happen? They did not happen. But we did have some deals happening, such as the deal between the UK and the EU that was signed on the Sunday. Before that, you had the deal between the US and the... did I say the UK and the EU? I meant the US and the EU, the deal that was signed on the Sunday. Then you had a deal between the US and the UK, framework agreements with Indonesia, Vietnam, and Philippines. And you had things such as the UK being charged a 10% tariff, and then you have the EU, which would be facing a 15% tariffs. This is just on some goods. Certain other tariffs, such as 50% on steel and aluminium, continue to remain, especially on steel and aluminium coming from the European Union. Now, just to give you an idea of where the trade deals have been made so far, we have, Pablo can maybe
That's
bring
right,
that
we've got
up.
the map here from the New York Times.
It's a New York Times article. And it sort of lists it quite well visually. Maybe we can just share that so people just sort of know what they're
I'll share it there. You can see it on screen.
The magic of technology.
So there is the UK, of course, and then the EU, and then you've got a few countries over here in Asia who have signed the deal. So not so many.
So these are just some of the deals, and it's just worth mentioning, just before we started the stream, news coming in that the United States is now going to be imposing from the 1st of August a tariff of 25% on India. Bear in mind that India was one of the countries that was trying to negotiate a trade deal with the United States. So clearly, it's not working out, it would appear. So basically, we're in a space now that we're all waiting on Friday, the 1st of August, to figure out what is the tariff rate that countries that haven't made a deal with the United States, what is it that they will be paying? And you could be facing something like 25% for South Korea, 36% for Thailand, and 50% for Brazil. That is what one is expecting might happen on the 1st of August. Was that generally a fair enough description,
I think you did great.
Stephen?
Yeah, I think that's pretty much it.
So what should we expect on the 1st of August? What's going to happen?
I have no idea. I think you have about as good as
Just stop holding back.
I mean, Trump has said that there's going to be no more extensions, and I think he's a little bit sensitive to this idea that he tends to back down after promising that tariffs are going to go into effect. To this point, we know that his hand has been forced a little bit more by what's happening on Wall Street, for example. As you mentioned, April 2nd, the markets went crazy because there was so much fear about what this would mean for the U.S. economy, for businesses in particular, and then the dollar went down just because it was seen as kind of erratic behavior, and so confidence in the U.S. Really sort of suffered at that point. Since then, we've seen that the markets have actually improved. Bullishness has gone back up. And then indicators that would otherwise suggest that something has gone awry, such as job numbers, such as inflation, such as consumer confidence, all of these have been kept more or less in a kind of area where it's not so bad. You know, the economy isn't bleeding and screaming out as much as we thought that it maybe would be. They're not in good shape necessarily, and there's every indication that by the end of this year they could be in much worse shape. So you have to imagine that he's got a little bit more confidence that he has some room to play with here, even with tariffs coming in. But it's really hard to say. You know, it depends on what level he's going to put on a nation like India, or where it ultimately comes down to with the EU. This is a framework agreement. There's still a lot to be worked out.
Can I jump in just real quickly about that? Because one thing that I thought the first comment actually that I mentioned there before was saying, we won't feel it right now, which is what you're saying, and that's what the indicators are showing, or the data that we have so far. But in economics, often it trickles down to the consumer. It takes time, right?
Sure.
So is that potential? Is that something that you're looking at as well? That it could take 12 to 18 to 2 years?
It's hard to say. What we're hearing from consumers in the U.S. is that they say, "Gosh, yeah, this is a real." Thing in the back of my head is that tariffs are there and that it could restrict what I can buy, or it's going to make it more expensive. So they're cognizant of it, they're thinking about it, but they haven't really changed their behavior so far. And that could be changing every month incrementally. We're seeing that consumer confidence is generally okay, but inflation is going up. And so these things are going to react bit by bit. It's not going to happen all of a sudden that it falls off a cliff. I think that's what we sometimes expect based on the markets and how we see these kind of erratic roller coasters when investors suddenly say, oh gosh, this is really bad, and everyone sort of plows in. But with a lot of these other indicators, it may just be sort of steady, slight movements, and then you look back 6 months and say, oh, something fundamental has changed. And that is sort of incrementally building up. But you have to question, what does that mean for someone like Trump, who tends to respond to much more drastic changes, drastic shifts, market signals, things like that?
That to me is really interesting. Sorry, the issue of
2 more days to go.
Yeah,
I guess we'll have many answers. I mean, just on the point of the 25% that apparently has been imposed on India, Neeraj Chaturvedi saying that it's a negotiating tactic with India, and the US wants India to shift purchase of oil and weapons from Russia to the US. That's one thing. Divorce, another one of our regular users, saying it's only been 6 months. People, only 6 months.
Yes, interesting comment here as well from Suman Barua. This guy, meaning Donald Trump, is literally playing casino with the stock market. And then another one, which we're getting quite a lot of comments of this sort, which is the US is just reciprocating. This is from News of the Day, 8922. The US is just reciprocating the tariffs other countries impose on them. It beats logic to accuse the US or Trump for anything. Accuse the ones who were enjoying zero tariffs while imposing their tariffs on the United States. So there's that sentiment definitely
Which is
out
a fair
there.
point, and we can bring that in. But just for the purposes of the discussion, because there's so much to discuss and we can't do it endlessly, just a quick structure. What I would like to do is try and talk about the most recent trade deal that's been signed, that's between the US and the European Union. That was over the weekend on the Sunday. Just talk a bit about that, the dynamics of that, and then to look at the trade deals or the framework agreements, as they're being called, with countries in Asia. You have Japan, Indonesia, Vietnam, the Philippines. What's happening there? What is the thinking there when it comes to Asia? And particularly looking at the role of China. That's how I would ideally like to do it, and then we can discuss along those lines. And to just sort of begin the first part of this discussion, we have our guest waiting patiently from New York, early morning in New York, Sandra Navidi. She is founder and CEO. There she is. Hi, Sandra. I hope you can see us.
Hi, Sandra.
She is founder and CEO of a consulting firm Beyond Global. She's worked as an investment banker. She's a registered attorney in Germany and the United States, and she's an author as well. My first question to you, Sandra, is there anything you don't do?
Is there anything we don't do as the US? I'm
No,
sorry,
is there
I didn't
anything you
understand the
don't
question.
do? Is there? I was just being rhetorical there.
Oh.
Yeah.
Well,
'Cause
I haven't quite managed to figure out what exactly Donald Trump is going to do.
We were really hoping for the $1 million answers on that one. But then, we want to talk to you about the trade deal between the US and the EU. There's a number of questions there and a number of potential learnings from that. But before I come to you, just for the benefit of our community, here's a quick montage of reactions that we saw after the deal was announced.
Let's pause for the moment and consider an alternative. A trade war may seem appealing to some, but it comes with serious consequences. With at least a 30% tariff, our transatlantic trade would effectively come to a halt.
15% is not to be underestimated, but it is the best we could get.
Ich bin mit diesem Ergebnis nicht zufrieden.
I'm not satisfied with this outcome in the sense that it's now good, but I'm simply saying that given the starting position we had with the United States of America, that more was obviously not achievable. In plain language, this means that the German economy will suffer considerable damage as a result of these tariffs.
So, Sandra, you had a variety of views there. I mean, there's been Chancellor Merz talking about considerable damage for Germany, and there's also been criticism from other quarters, particularly from France, about this deal. Are these tariffs in the interest of the European Union, would you say?
No, I would say they are not. And I would not even call it a deal. First of all, a deal is an exchange, both parties give and take. In this instance, it seems like Donald Trump dictated the conditions. Secondly, nothing has been signed yet, as with so many other deals that Trump announced. And in effect, there's really nothing to go by. And thirdly, and perhaps most worryingly, both parties disagree about the terms. So the only thing that seems to be clear at this point is that there be a baseline tariff of 15% on most goods, but what exactly applies to semiconductors or pharmaceuticals or steel, for instance, is in dispute. Both parties have published statements which contradict each other.
So what does that mean? I mean, you had Ursula von der Leyen sitting there with Donald Trump and saying that, okay, this is the framework or the deal that we have. So what you're saying, everything is just hot air, nothing's been decided, there's going to be no tariffs placed on the European Union, is that it?
Well, I think Ms. von der Leyen gave Donald Trump something as a negotiating tactic, which was she let him get away with big headlines. For instance, that Europe would spend or invest $750 billion over the next 3 years into U.S. energy. From many perspectives, this is just not feasible. It's not going to happen to that degree. Secondly, also the obligation, presumably, of spending or investing $600 billion from the EU into the US. There's really no mechanism as to how to do that. Howard Lutnick, the trade minister, was asked regarding that, and he claimed that he received a list of companies that would invest in the US, but that's not legally binding. Companies can change their minds. There's really no way that the EU can force companies to invest here. So there's a lot of uncertainty still, and just generally speaking, I think, yes, the EU was under pressure to come up with some sort of agreement, because unless there is at least a baseline tariff, nothing's going to happen. Companies won't invest, they won't build, they won't export. So that was a problem. But this presumed certainty is relative because Donald Trump can change his mind on a whim. And that is something fundamental that has changed in previous times. First of all, parties abided by rules, which Donald Trump doesn't. He wants to change the rules and wants to dictate them. But secondly, he had a panel of experts in the Treasury, in departments who would advise him. But everybody has been saying, and also CEOs that I have talked to who have been to Washington, the only person who decides what's going to happen is Donald Trump. And if he changes his mind, there's really no reining him in, neither by Scott Bessent nor Lutnick, who basically does rubber stamps everything that Donald Trump wants.
So basically the message to other countries that are looking on is that we cannot trust what comes out of the mouth of the US president. What is here today may not be there tomorrow. Is that it?
Yes, that's it. Of course, parties have to try to negotiate the best deals and then stop and go. And maybe you find Donald Trump when he's under pressure at home because of the Epstein files or something that puts him in a position that he wants to give something just to get something done. That is all within the realm of possibility. But I think the lesson for the future, and by the way, I was at the World Economic Forum in Davos in January, and the mood among CEOs was decidedly giddy. They were so excited in view of, new tax laws and deregulation. And also European CEOs were optimistic, even if cautiously. And I said in a talk show in Germany, I said, people, you have to be in an emergency mode. Donald Trump is going to attack economically, politically, and you guys have to do everything to become independent economically, but also that's very important and also in dispute, by the way, when it comes to digital services.
Stephen, is emergency mode, is German industry now in emergency mode? We were talking about Porsche and Mercedes earlier.
I think they have a lot of questions. I think what we've heard initially is that they're happy to have some sort of certainty. They believe the 15% gives them that kind of certainty. In certain branches, such as machinery, where Germany traditionally has been a major exporter to the U.S., this could be things like lasers. It could be, automation technologies that go into factories, very specialty developed sort of machinery. Oftentimes, there is no other provider really outside of German companies, and so U.S. companies will have to pay those prices. That being said, there are more and more competitors in China, for example, so they can't look at this and say, well, automatically someone's going to pay that price. It does cause stress. With the auto industry, it also causes other forms of stress, and especially if you look at the German government in particular, if it looks at the auto industry and what this 15% import tax would mean, essentially, that's what a tariff is, then it essentially means that there's every incentive for companies to invest more in the United States instead of building out in Europe, because immediately they have a 15% surcharge on top of whatever they move over there. So that is a problem if you're concerned about deindustrialization, if you're concerned about losing German jobs, and this, of course, applies across Europe to other fields as well that are hit by this 15%. So there is, again, on the one hand, a bit of acceptance that, okay, at least we have certainty because, as was alluded to, there was so much uncertainty that prohibits investment, that prohibits people from putting money in the right place, making decisions. But 15% isn't necessarily a great thing. Yeah.
I want to just jump in because there's a couple of interesting comments. One responding to Stephen, actually, from Davos, who knows, he says, I know so many people that aren't making big purchases and really tightening their spending in all areas. Davos lives in the States. And then just one more comment, which actually we could put to our guest, Sandra, there. Nile Chaturvedi says, not one economist can explain what's the end game of Trump. Tariffs have risen from 2 to 3% to 18% in the United States. What business can absorb that? The only reason inflation hasn't gone up is because business preempted and imported. So is that actually the case?
Donald Trump's goal is to fill the coffers of the U.S. so that there is more money to be distributed upwards to the 1%. Trade and tariffs are very complex, and Donald Trump can't think around the corner, because otherwise there may be scenarios that just don't make sense. For instance, if car companies sell cars to the U.S. and there's a 15% tariff, if those same car companies produced cars in the U.S. and steel is 15% and car parts, depending on where they come from, have a higher tariff, then it may be much more expensive for cars to be produced in the United States rather than import them in the United States. So that doesn't make any sense. It hasn't been calculated for a whole slew of goods yet, but these are things that are also risky for foreign companies who previously thought, okay, we'll just go to the US, we'll produce there, we'll invest in Mexico and Canada so that we'll get our parts more inexpensively. But due to Donald Trump's unpredictability, that now is dangerous. It's just not a safe investment.
Can you tell us what the thinking in America is? I mean, you're somebody who interacts with senior leaders of industry. Donald Trump keeps saying that government coffers are filling up with all this tariff money that is coming into the United States. Do they have that sense of positivity and saying, well, money is coming in and ultimately the business environment will be much better and we will eventually prosper in the long run? Is that the feeling amongst business leaders in the US?
No, US CEOs don't want tariffs in general. They don't even want tariffs to protect their industries. They want to be competitive, and tariffs are counterproductive when it comes to being competitive, because it takes away pressure to innovate and to invest. And so what you see in countries that are isolated is that their innovation rate goes down, while the goods that are not so good, say a washing machine, is more expensive because price pressure is also gone. There's just no competition. So that's a bad thing. How does Donald Trump get away with it? From the very beginning, Trump and the members of its administration have claimed, or at least implied, but in most instances outright claimed, that foreign governments, or at least companies, pay the tariffs. So when Howard Lutnick boasts, oh my God, we're getting $1 billion into the US and in our coffers, he could just as well say, hey guys, I just increased the taxes on you by $750 billion. I think that's the number that he quoted. So it's bad for Americans. Many Americans, at least Republicans who voted for Trump, believe Trump. And then also we've seen what he does in case it gets dangerous for him if the economy slows down. First of all, he will blame Jerome Powell of the Federal Reserve, that it's due to him. He didn't lower interest rates. And also he'll point to companies. He has already said, look at Walmart, the profits that they made last year at your expense, and they're increasing prices because they're so greedy. So he's deflecting the blame from him to other parties.
What is the lesson here for Europe? And this is something I want to ask you, Stephen. So you said earlier that there is a bit of stability. In turbulent times, it at least tells you what tariff rate you're looking at, if you're looking at these talks that are happening between the US and the EU. But long term, the EU, what does it want to do? It needs to continue trading with the United States. Is that strategy A, and is there a backup strategy? Does it need to talk to other countries as well?
The U.S. was the backup strategy, right? China was, if you're looking at Germany, for example, right? So the industrial leader in Europe, China was one of your main markets for exports for a long time. The U.S. was another. But after the pandemic, people in China stopped buying as much. There were more competitors in China all of a sudden for the things that you used to be supplying. They were supplying the internal markets there, so sales went down. And many businesses said, let's turn to the U.S., right? The economy picked up there much better after the pandemic. And so many, like Volkswagen, like other companies, really doubled down on the U.S. as the market of the future. And now suddenly that's not there anymore like it once was. So what do? What we've seen with this trade, with this framework deal, I should say, and again, we have to emphasize there still are a lot of question marks around it, is, if anything, it sends a political message to Germany, to the EU as a whole, about about the necessity of diversifying trade partners, first of all, but also making things more competitive so that industry will continue to stay in Europe, to stay in Germany. And this just adds to a drumbeat that was already there before, saying that, look, energy costs are too high. There is too much bureaucracy. The regulatory environment is not conducive for doing the kind of business that we need to do. And then the big one, the Herculean task, that sort of really is a real issue with the EU in general, when you look at every single, consideration of consolidation, is further consolidation. Can you consolidate? Can you make it easier to move money around all 27 member nations to really add your firepower together? Or are you going to make it so hard by having individual regulations, and then you have this fractured kind of continent? And that is really the big overarching discussion that some people think this will lead to is that making more progress, this further consolidation, or that kind of urgency could also maybe cause it to fray more at its edges. And so it's really a critical moment for the EU in a lot of ways if it wants to continue with the same kind of quality of life, with the same kind of business that it had before. It needs to diversify trade on the one hand, but it needs to make doing business in Europe also more attractive. And that's easier said than it is done.
I have so many questions. I just want to ask, go back to a sentiment that was expressed in some of the initial comments that you brought in. What does this mean for citizens? What does this mean for Europeans? I mean, those who work with companies, those who are employed. I mean, is there an opportunity here of companies innovating and hence you having access to better jobs? Or is there a fear that because of these tariffs, companies will have to lay off individuals and then there's going to be job losses? What does it mean at a very individual level?
There is concern about job losses. We have seen job losses in manufacturing, frankly. They have not been massive. They have mostly been spread out in a way that, let's say, they occur in the next coming years. They would be met with good severance packages. They are traditionally a bit softer than you might see in places like the US, where you would have hard layoffs. And they haven't happened in the kind of massive numbers that really cause eyeballs to really pop open. But they are happening. And first, it was because of China. It's still important to mention that China as a market is a really big issue for the EU right now. And also the US is being thrown in there as well. Now, we still can't really sort out how much less business is being done with the US as a result of these tariffs. They've been all over the place. A lot of deals have been suspended, frankly. It's hard to make contracts, to finish them, to go back and then readdress them because something has changed in the last amount of time. So it's going to be interesting to see what businesses, how they react to this and what it ultimately means. But yes, it is about layoffs, essentially. It is about the future of businesses. When reliable markets are gone, when China is not buying, when the US is not buying, and when there's not as much demand in the EU for products made in the EU, then who are you turning to?
And I'm just going to jump in as an Irishman, of course, and you'll know this. Ireland was firstly a small country, but in many ways, really, certain industries are massive there in relation to the size of the country. And of course, we're talking about a lot of these services industries. So there was a lot of concern, and the pharma industry as well. Sure. A lot of US businesses are based there. There was huge, and there is huge concern in Ireland that this could have been catastrophic for the country. Also, a little interesting thing is that, of course, just wanted to throw it in there to make things even more complicated is...
Go on.
The UK has a 10% tariff. The EU has 15%. Ireland is in the European Union. What about Northern Ireland? So Northern Ireland, which is, we're talking about Brexit as well. So that's a big issue and a big concern as well.
I just want to turn to you, Sandra. Sandra, thanks so much for waiting patiently while we're just sort of discussing the EU in particular over here. I just wanted to take from you on, given whatever has happened over the weekend and the conversations that have happened, the no deal that we have, the no deal deal that we have, where is the relationship between the US and the EU headed? I mean, it's been described as the most consequential trade relationship in history. Where is that headed? Is that fraying at the seams? Will other trade relationships take precedence over it? How do you see it shaping up?
Yeah, I think it'll be under pressure also for geopolitical reasons. It is still unclear what kind of relationship Donald Trump has with Putin exactly. He has now taken a harder stance in most recent days against Putin, but that could be shown. We don't know. I think he has an adversarial attitude towards Europe. He's not a good faith actor, so anything that is negotiated can't be relied on. And so I think, yes, and also all what's happening economically is happening against the backdrop of artificial intelligence. And what I'm hearing from Silicon Valley titans is that in the next year and a half, 2 years, artificial intelligence is going to make quantum leaps. So be that as it may, but it's going to be increasingly more integrated into companies. And what CEOs here have been saying with regard to Donald Trump's tariffs is that, well, if we don't have enough people because of deportations and everything, we will use AI more efficiently and increasingly going forward anyway. And I think there's going to be a big gulf between the two continents because Donald Trump has instrumentalized Europe's dependency on digital services. The International Criminal Court, he instructed Microsoft to cut off Outlook services and cloud services because they were looking into Israeli politicians, and Donald Trump didn't like that. And so that part of the court was paralyzed. They couldn't work. Microsoft is taking this threat so seriously that they have said that if they got directions from Donald Trump to, for instance, throttle services to certain companies or countries, that they would take legal steps. But that's just another example that shows us how dependent Europe is and how dangerous this dependency can become, and the necessity to become more independent itself.
It's quite a reality check there from you, Sandra. And you also gave us an idea for the future news desk theme, potentially the impact of AI on businesses, particularly American businesses. We'll leave it there for the moment with you, Sandra. Thanks so much for joining us this early on a working day from New York. Appreciate your insights. Thanks so much. Have a good day.
Thanks, Sandra.
Thank you for having me.
I think we can sort of explore that theme at some other
Add
time.
that to the list.
We have a long list of themes potentially on News Desk. And by the way, if there is something that you think, a subject or a theme that we should be discussing, throw that into the chat and we can have a look at that after this stream is over. But then, going back to the initial structure that I'd sort of suggested at the beginning, we were looking at the US-EU trade deal, and I would now like to look at some of the framework agreements / deals / conversations that the US has been having with countries in Asia. And the reason I say that is because you're talking about framework agreements with countries like the Philippines, Vietnam, Indonesia. That has been happening with Japan as well. We'd like to sort of discuss that. And to do that, we are joined by Alicia Garcia Herrero, who is with Natixis Investment Bank. She's chief economist for the Asia Pacific. For those of you who are regular DW News viewers, she will be a very familiar face. Alicia, thanks so much for joining us. We know it is quite late in the evening where you are, but thanks so much for making the time. I just had a question at you at the outset. I mean, a lot of the tariffs that were announced on the 2nd of April, I know that those tariffs were suspended, but a lot of the tariffs, like 46% on Vietnam, 49% on Cambodia, these were on countries in Asia, and most of these countries do not really produce high-end goods. They are producing on the lower end of the manufacturing scale. Yet, even now, after all this deal-making, after all these conversations, they are still paying more tariffs than some of the other nations. For example, UK at 10%, the European Union at 15%, but the Philippines at 19%, Vietnam at 20% tariffs. Why are Asian countries getting tariffed more?
Great question, and thanks for the invitation. The reason is that other than the European Union, the bulk of the U.S. trade deficit is in Asia. It's obviously huge with China, but we also know that China's exports to the U.S. have been waning since Trump 1.0, but not really. I mean, only directly. The reality is that those exports, Chinese exports, have been going through other countries. The best example is obviously Vietnam. And Vietnam itself has a massive trade surplus with the US that the US is not happy with for two reasons. First, the surplus. Yeah. Second, it's China-driven. And I think this is what's driving the agenda. In fact, Vietnam ended up having two tariffs. One is direct Vietnam products, 20%, 40% if it is a rerouting of goods from China.
I mean, it's just, I have so many questions. I'm going to try and hold myself back and ask them one after the other. Let's just look at this rerouting of trade through Vietnam. I'm just trying to understand. You have Donald Trump, the administration, which says it wants to, I don't know, target China, encircle China, ensure that China doesn't come at the same level of the United States. How do you do that? By targeting strategic partners like Vietnam and allies like Japan and Philippines, charging tariffs from them. It would seem to be bad for business, right? Or is this just me being slightly weird in my thinking?
You're so right. Okay. Let's start by Vietnam. I actually think that this is a mixed bag. So Vietnam would be one in which you would understand that Trump, if he really wants to encircle China, and by the way, I have a big question mark on this one by now, because he's treating China in a way better than he's even treating Vietnam. We could go further on that, but let me answer your question. So for Vietnam, if the objective is encircling China, I think Trump has a point, because most of the value added of what Vietnam exports to the US comes from China. So at the end of the day, if that's the objective, you have to do it. But this is not the case of Japan. This is not the case of the Philippines. So why do it? And I think at this point, Trump, and Brazil is the best example beyond my realm now, but it's political. Trump wants countries to obey, literally. This is Japan. This is the Philippines. Sometimes obeying also means encircling China in a way or another, because, if something happens in Taiwan, say, both Japan and the Philippines are absolutely key for the US because the military bases are there. The Philippines actually are the closest military bases. So, you can argue that you could still make the point that these countries are needed. So you push them, you give them something less than expected, but more than you had actually threatened. And there you go, they will follow you. If they do, that's beyond my paycheck. I'm not sure whether this is going to work.
Okay, I have a number of questions for you, but let me just ask you one before I come to Stephen. You are a chief economist of an investment bank, a well-respected investment bank in the region, and you have way more access than any of us at the table with business leaders in Asia. Can you deliver for us the sentiment that they share with you when they talk about tariffs? I mean, the reason I wanted to focus on Asia is because you talk about Asia as being this engine of growth, right? This engine of the new economy. So what is the sentiment? What is the mood there amongst business leaders there?
Okay, so I just landed from Shanghai, so let me tell you what I've seen in Shanghai. I think only a couple of months ago, the sentiment was pretty negative. I mean, this was going to hurt China. China had barely managed 2 months ago to lower those incredible 100+ tariffs that the US had imposed on China. So there was this fear of not making it because of US tariffs. Guess what has happened since? We have had export data for China in June, that's the latest data point, at 5.8% growth. I mean, this actually higher than China's GDP growth. So exports are doing better than the rest of the economy. It's kind of amazing. How can China do this? And the reality is that China has, in a way, captured the US. I would put it this way, very simply. The US cannot deliver to its consumers without China. As simple as that. So China is out of the game in the sense that China is wait and see. The leverage is huge, whether it's exports, export controls on rare earth, whether it's literally Walmart's shelves, as simple as that. So I would say China is fine, to be very frank, and that's Trump's problem. But the rest, if you go to Vietnam, it's desperate because they know that this is going to hit them. So it's very, very mixed.
It's a weird place to be in, right, Stephen? I mean, if you're outside of China, in Southeast Asia, you can't do without either, right? You need the United States and you need China as well, correct?
Sure. Absolutely. And we know that from Trump's first term that Vietnam had profited very handsomely from the tariffs that were put on China, as Alicia said. And this time it was definitely a target because of what happened in that first term. So yeah, you obviously, these are smaller nations that have really big export surpluses with the U.S., but they don't really import that much. And sometimes that's sort of stacked because of the nature of goods moving from China to them. But oftentimes, the tariffs that they have, they're there for other reasons too, including currency stability, things like that. So in Trump's world, we know that he generally applied a kind of sort of formula to everyone looking at their trade surpluses against the U.S., and that means that some of these nations were hit a lot harder. But geopolitically, as was mentioned, you need a bulwark against China as well. So many of these nations are sort of in this kind of desperate spot between a rock and a hard place, whereas China has a lot more leverage. And to add on to what Alicia said, it has tremendous leverage with these critical minerals that are important for magnets and for electronics. And we're seeing that right now really come to play. And that's why China has been able in some ways to sort of play it cool and then deliver what looks like a very significant blow. And this is not just the US, but also to Europe, in that it's really curbed export licenses for very, very critical minerals, of which it refines, some crazy amount, like 90% of the world's supply of many of these minerals. And these are necessary for electromagnetic engines, for motors, basically for the heart of electric vehicles. But not just that, for other things as well. So it does really have a kind of ace up the sleeve when you look at just that one factor, and it's played it out really well.
We've got some comments coming in, but there's one thing I just want to jump in, because Michelle sent us something just from the New York Times, which is quite interesting, what you were mentioning about India before, which says that the US has announced that India would pay a penalty tariff for its purchases of Russian oil in what appear to be the first use of the so-called secondary tariffs. So maybe we can talk about that a little bit if we can. Also, we have a couple of questions
we'll try,
as well.
Pablo. I don't promise anything. There's so much to talk about.
Add it to the list. But we do have a couple of questions actually for Alicia. One is actually from one of our regular viewers, Carolina Vilena, who says, why did Trump/Philippines tariff by compared to other Asian countries? Maybe Alicia can give us a bit more information on that. And then we have another comment here about China, that the China trade talks, which amounted to nothing. Trump is pressuring India with a different tariff threat. Only countries who have had a deal have basically given in. Why would India and Japan do a deal on US terms? So, like Alicia was saying, there's not one size fits all, essentially. But maybe you could give us a little bit more insight on those differences that we've seen already.
Maybe I'm going to talk about the psychology of surrender in Asia, and perhaps apply to Europe too, given what we saw. So think about, the question was about Japan. Think about Japan. Japan went through elections right before Trump struck a deal. And those elections basically meant that Ishiba, the prime minister, would basically have to leave because he lost the upper house. So Trump had it all basically to get a deal with Japan that would have been worse for Japan than the UK deal, which was kind of the baseline for the West, for Europe, for Japan. Now, because Japan had to surrender for the fact that, something had to be done, or the yen would have really slide, and after the election result, and we actually saw the government bonds, JGBs, basically shooting up, which is a big issue because Japan has a major, the largest actually public debt on earth. So, that surrender, in my view, was actually quite important also for Europe because, it happened that Europe had to basically come to terms after Japan had surrendered. Now, next is India. So what's going to happen? What is the baseline? Frankly speaking, I would have expected Trump to understand that India is key, absolutely key for the US if the US wants to ever create a supplementary, if you want, if not alternative supply chain to China. The US cannot do it without India. It's the one and only country that is not yet as dependent on China in terms of supply chain as the rest of Southeast Asia is. And guess what? Because of that leverage that the US has, that has basically shown with Japan and the EU, probably Trump is forcing India to accept conditions that will not help Trump create a supply chain. So it's ironic. And that's what I call the psychology of surrender, that it doesn't even help the US itself.
It's interesting you coined this phrase, psychology of surrender, and I will come back to it. But just on the point of India, isn't it true that Indian manufacturers derive a lot of raw materials from China? Particularly, for example, you look at India's ambitions in solar energy. A lot of them, the large majority, and I don't have an exact percentage, but I know it's a huge majority of the photovoltaic cells come from China, as they do indeed go for the rest of the world. So in a sense, you were talking about India not being dependent on Chinese supply chains, but isn't it just the opposite?
Well, I understand what you're coming from, but let me tell you that India is no exception in the sense that when you talk about renewables, whether it's wind turbines or photovoltaic panels, everybody's as dependent as India, even the European Union. So, that's not kind of the benchmark, if you allow me. But for the rest, if you look at imports from China, you look at Indonesia, look at Malaysia, it's even worse than India. And the reason why I highlight India is that India's industrial production is still very small compared to Vietnam. So there is a long way to go.
Right.
Vietnam is already built and it belongs to China. India is not yet built. It could belong to somebody else, including India, obviously. So that's why I think India is an opportunity for the US and for Europe, for that matter.
You talked about there's the psychology of surrender, and there was a question earlier, I think, from one of the comments that Pablo brought up about where does this all head to? I think that was in the Europe section. So my question to you, Alicia, is that is it the case that every country in Asia will basically have to have an individual deal with Donald Trump and will essentially have to surrender to the US president to get a deal that is halfway acceptable?
Yes, well, Trump made it easy probably 2 to 3 weeks ago when he said, I won't have time for everybody in the natural, so there will be about 100 countries that will go with 15. That's something like that, 15 to 20, if I recall correctly. That's kind of, so I'm not expecting more than India and South Korea. These are the big ones we're still waiting for. There's a day to go, by the way. So, praise for
what will happen in 24 hours?
A lot can happen.
A lot can happen.
Say that. Yes, about the psychology of surrender, what I wanted to say is that the psychology comes, I may not have actually finished that thing, by the fact that, yes, you surrender, but you also hate the fact that you have surrendered. So I don't think this is a game for Trump whatsoever. And we're seeing that with Europe. What's the response to this? To basically withdraw, to deal with somebody else. So this is a big win for whom? For China, obviously. That eventually that's what it is.
So all these countries will eventually basically get onto the side of China? I mean, weren't there concerns already about Chinese overcapacity flooding Southeast Asian markets at a time that they can't afford it?
The thing is, Japan can't side with China for obvious reasons. These are historical reasons. It's just too risky for Japan. And so forget about Japan. South Korea could, especially with a new president. And yes, South Korea is suffering enormously from China's overcapacity. I would say that South Korea and Germany probably are the biggest hit countries in the world because of this overcapacity. And now the issue is, can you turn? It all depends on how much Trump, hits the accelerator. And this is why Trump's game is very dangerous for the US, because even if you don't want to, you feel compelled because you have to surrender. This is why it's a very psychological problem that these countries are going to face, maybe choosing even a worse option, but just because, charm offensive versus surrender. What do you choose? If you're a politician and everybody thinks that you did the wrong thing. Look at what's happening in Europe. So, it's tricky. I think Trump is really hurting himself, hurting the US at least.
Let me go first, Pablo,
Yeah,
because just on China, I want to come to you, Stephen. From everything that Alicia is saying, it sounds like it's China's gain at the expense of the US, even though the US might think it is winning. And just on that front, I wonder if China is emerging as a deal maker, because you had this recent forum in Malaysia, if I'm not wrong, where you had ASEAN nations, the GCC, the Gulf Cooperation Council, and China holding a forum. I think it was the inaugural forum that they had. So is China now going to be this glue of international trade, bringing diverse continents and regions together in trading blocs?
Alicia's really the expert on this more than I am, but I would venture to say that just from what we see, it's really hard to say. China still has its own domestic issues, and China obviously wants to performatively be the kind of glue in a system that it says that America has left now. The amount to which it wants to commit, the amount that it has the economic stability to commit to the kinds of forums that the U.S. is pulling out of, the kinds of aid. We see, obviously, there has been over the past 10, 15 years a significant amount of development aid in certain parts of the world, but we've seen that sort of tail off in recent years, especially with the kind of property crisis that we've seen. So it's hard for me to see China stepping necessarily into that to the same extent. Obviously, they want to continue to increase market share in certain very valuable sectors for them. They've channeled more capital into factory manufacturing and more advanced manufacturing, whereas it used to go into areas like property before. We see this with electric autos. We see this with the fact that they're in machinery areas that Germany once dominated. Alicia referred to that. It's a problem for Germany, incredibly, that China is now in these kind of markets. It's a problem for Italy. When you look at textile machines, all these areas where Germany and Italy prospered, China is now there competing with them. So we know that their goal is really to increase market share in these areas more than it is to open up their own kind of market to outside businesses. That's been the complaint of other economies for years. And given the fact that the domestic consumption there, that the fact that there isn't much domestic consumption compared to all the kind of exporting there is, China pays lip service to that. They say we are going to increase domestic consumption. But there's a lot of belief that they're just structurally not in a place to increase the kind of purchasing power of normal citizens. That's not how their economy is going to work.
Well, there's comments coming in, that's for sure. Plenty of opinions, we'll say. One from RGR says, Trump is not a deal maker, he blackmails countries. Then we have another question here, actually, which maybe Alicia could answer, which is, should we wait for the next US president in order to resolve these tariff issues? That's from Carolina Vilena. We might have to wait 3.5 years, so maybe that's not the best solution, I would say. But yeah, plenty of opinions there with regards to Trump.
But it's an interesting thought, isn't it, Alicia? I mean, do you think that this whole idea of tariffs and this whole, I don't know, dare I say, reorganization or the rewiring of global trade is only a Trump idea, or is it an idea that has enough backers for it to continue beyond a Trump term?
Okay, so for Carolina, I know she asked very good questions. So here you go. If I were Europe or anybody else, but certainly Europe, given our size, I would certainly not wait for the next US president. What China did during Trump 1.0 was exactly to get ready for a potential Trump 2.0. And what China did was to become more self-reliant in a nutshell, and to be able to withstand Trump. And this is exactly why China, among many other leverage tools that it has, refines 90% of rare earths, because China knew from the start that the whole world would need them, including Trump. So we have to learn how to become more self-reliant. Not because, we don't believe in free trade. No, it's out of survival. We Europeans need to realize that these are very hard times and that they won't necessarily be over in 3.5 years. By the way, as you said, this is a long time for Europe to survive. So I would just go ahead with self-reliance and economic security and everything that relates to that concept.
I'm just wondering about self-reliance in what we have at the moment, which seems to be slowly breaking apart at the seams, a globalized world. I mean, do we not live in a globalized world? If you expand that beyond trade, you look at movement of people, you look at movement of ideas, we have never been as interconnected as we have been, as we are now. Can we, when it comes to trade, de-globalize? I don't even know if that's a word or not, but I'll just use it because I think it's a short expression of what I'm trying to convey. Can we afford to even de-globalize? And is that what you mean by self-reliance? Or is it a matter of relying on like-minded partners who have your back, so to speak? I hope this makes sense.
Yeah, it does. And I think it's the latter, certainly. But let's face it, the first thing to do for self-reliance is to have a single market, which we don't. So we can talk about an alliance of the willing, but I always say, what about us willing to be, an integrated market, which we haven't really yet. So, we have a lot of work to do internally in the European Union. But beyond that, the world doesn't end in the US and China. And therefore, there is, 4.5 million when we exclude Europe, the US and China, waiting out there for somebody to knock at their door. And hopefully, that not being only China, yes. So you can think of Africa, Latin America, you name it, rest of Asia. Everybody wants new partners. So we just have to grab that opportunity rather than. But that's self-reliance in a way, because what it means, maybe it's a slightly broader concept, but China has done exactly the same. They call it dual circulation. Yes, sure, you protect yourself, but second circulation, you look for partners. That's the Global South. That's, Belt and Road Initiative, you name it. China is not alone. Whoever thinks that China is alone should just look at all of the summits China organizes every year. So what about our summits with the rest of the world? Why do we always have to look at the US, especially now? I mean, let's open our mindset to other possibilities. And that in itself is self-reliance. In an open, if you want, we call it in Europe, open economic strategic autonomy. Okay, fine. It doesn't really matter how we call it, but let's do it.
Just to wrap up that thought, and with that, because I know it's quite late where you are we looking at a future in which the rest of the world, the Global South, a term that I really don't like, but if you use it, we generally know which countries we're talking about, in which the countries of the Global South and other countries get together in a mishmash of alliances, and the US remains out of most of these because it has chosen to be so. Is that the kind of future we're looking at?
Yeah, so it seems to me, yeah, because if the US were thinking differently, it wouldn't impose 20% or more tariffs to India. I mean, that it is just not understandable what the US does this. So I think, unfortunately, the US is retrenching from its global power. And what the EU has to do is, instead of cry, for spilled milk and over tariffs, just move on and offer its opportunities to the rest of the world, as China is. That's it.
Alicia, it's Pablo here. I just have one more question with regards to what you were saying before, with regards to the 4.5 billion people or so in the rest of the world, and this sort of interim period, we'll call it. If we trickle it down to the consumer, because at the end of the day, this is what happens. It's all of us who are affected by these big issues that we're talking about here. How quickly does it take an economy, and I know that's a very broad question that I'm asking, but the impact of that then on the average person, how in this period that we're in now or potentially entering now, are you concerned of what the impact would be then for the average consumer out there, or how do you see it?
Well, because I'm an economist and I work with data, let me tell you, and this is quite interesting, that a recession in the US is more painful for the rest of the world than average 15% tariffs. As simple as that. What matters here is that the US doesn't go down. So, what you're saying is it terrible that we have these tariffs? Well, in a way, it's the US consumer that will pay. Of course, there's differences, yeah? You have 10 rather than 20, you will export more if you're at 10. But the point is the overall impact is actually not as big as people think. So I'm not so worried about the tariffs. I'm worried about the US economy, and I'm worried about technology, because we didn't even talk about that. But the reality is that people out there should be much more worried about, in my view, that basically technology that substitutes labor, which is surely the technology that we have to grapple with nowadays, AI, quantum, you name it, than tariffs.
And we'll wrap up on that thought, because we have a second guest who is talking about artificial intelligence. We really need to do a news desk on artificial intelligence and the impact on business. We know it's late where you are, Alicia. Thanks so much for sharing your valuable insights on the mood in Asia. Look forward to talking to you again. But till then, have a lovely evening. Thanks so much for joining us today.
Alicia.
Yeah.
Artificial intelligence.
That was a sobering thought there.
It is quite a sobering thought, because that is something that came up in the first Trump administration as well, right? When he was talking about these jobs disappearing from America because of globalization. I think people making the point that a lot of jobs have gone to AI, right? I mean, I don't know. Do you have anything you can add on AI and the thinking with AI when it comes to businesses? I don't know, here in Europe.
Yeah, I mean, obviously, in Europe, the concern is that they're falling behind on AI. These are, Europe's first instincts, many critics would say, has been to regulate AI instead of creating an environment in which it can thrive, in which you're encouraging businesses to try it out, to use it, and to really prosper with it and develop something within Europe. that is then competitive in the rest of the world. There are a lot of good AI researchers, just like there are a lot of good deep tech researchers in general across Europe. If you look at Munich, for example, there's a whole sort of cluster of really neat stuff when it comes to deep tech. You're talking about quantum computing, you're talking about fusion energy, you're talking about AI. The problem is turning that into a business and getting it to a point where it doesn't just march off to the US to get end-stage funding and actually become a company. And that is Europe's problem, is that first it looks at AI and tech and says, we have concerns. This is the critics' account, right? And then second, and this is quite obvious, it just can't raise the amount of money to compete with the US or China. And so these are problems that all of this comes back into. When we talk about tariffs, when we talk about making Europe competitive, it comes back again to this idea of, can you raise money? Can you raise capital? And can you create an environment in which there is innovation and in which businesses are going to thrive? And it's more critical now than ever, many would say, because of AI, because of quantum, even because of something as outlandish sounding as fusion energy. All of that research right now, all of those startups are primarily in the US and China. And they're not as much here in Europe because, again, Europe is a federation of 27 countries with 27 different regulations for the most part when it comes to moving capital around. They can't just shovel it together and throw it in one startup. There's all sorts of reasons they can't do that, and that's a huge hurdle.
We need to have you back in the studio and we talk about AI and business.
Yeah,
we
think
need
so.
to do that sooner rather than later.
Respond to that. One of our comments responding to this topic, this kid said, it's a good point. We aren't talking about AI enough, and it's far more scary to me than tariffs.
We will talk about it. We will talk about it, but just it's beyond the scope of the discussion right now. But this was a teaser. This was a teaser. So I'm glad that our guest suggested this as a news desk.
There is a lot of concern, though, about AI. It was great that Alicia brought that in.
Yep, and not just Alicia, but also
Sandra too.
Also Sandra.
Yeah.
You've been looking at the poll, and I think you closed the poll because I saw that hint of that in the chat.
Did.
Do you want to share the results with us?
Yeah, I will. We have quite tight result. Let me repeat the question again. How should your country respond to U.S. tariffs? We've got 194 votes. 31% say seek new trade partners. Another 31% say stand firm, show strength. 19% says accept Trump's trade terms, and 17% says boost the local economy.
Well, there's similar kind of results that we had assumed, right? Seeking new trade partners, that's something that Alicia was also talking about, what, 4.5 billion people?
4.5 billion, yeah.
Outside of the European Union and the
US and China.
And the United States and China. It's not a small market.
No.
And stand firm and show
Very
strength.
interesting what you said there. She's like,
Self-Reliance.
they're there, waiting.
They just need to be grabbed. Maybe we can grab them in the next episode of News Desk.
Interesting.
But let's see.
Definitely.
I think that brings us to the end of this stream.
Absolutely.
Stephen, thanks so much for being in the studio. Look forward to having you back when you talk about artificial intelligence. Cherry, thanks for being in the chat. I just love saying that. And thanks to all of you for sending in your comments and your questions in the stream. We're going to be back again next week.
And of course, we will post our upcoming show a day before. On Tuesday, we'll have what we will be discussing on Wednesday. So always send in your comments. That's on YouTube, of course, in the community page. And send us in your comments and questions. As always, we will read them out in the show.
And who knows, maybe we'll be talking about tariffs, given that Friday is the deadline and maybe something happens that requires discussion
24 hours is a long time.
24 hours is a long time.
Yeah.
It's like a month in nowadays terms. Thanks, everybody, for watching. Have a lovely day wherever you are. See you next time. Bye-bye.
Bye. Take care.